All right, all right. We are gearing up here. Let me get comfortable in my chair here. Just popped in on time. Had an unexpected stop I had to make, but we are ready to go inside of our YouTube members area. Happy Saturday, Alejandro Santana. Thank you for your message. Happy Saturday to you as well. Thanks for being here. My man, Liberty Wolf. What's good, buddy? What's good? Yeah, it's funny. My wife just booked 2 more cruises for 2024. So we're excited to get back out on the water again next year. That's really what it's all about. For me, my humbleness in trading, that's what pretty much what I use my trading account for, is just to be able to travel and give our kids all the experiences they can get. So again, that for us is very, very important. So yeah, pretty awesome stuff here. But anyways, hey, welcome. I just want to show you something. And again, ask questions. If there's a particular chart you want me to look at, I'm going to leave the last 10 minutes to maybe do a quick analysis on a chart. I am going to look at, if you want me to look at that natural gas chart, I was looking at it earlier this morning real quick. But I want to kind of show you something that I think really helped me at the beginning. And depending on which platform I'm using, my iPad, I think I still have the Bollinger Bands on there. My phone, I have it as a setting every once in a while. I think it's a good way for people who don't have a lot of experience, or even if you do, like I said, I'll still pop them on there because what I'm going to kind of show you with the bands is, the bands kind of works like a rubber band. And just like you take on a rubber band, and I tried finding one real quick, if you pull the rubber band back just a little bit, and let's say you had something in there, it's just going to go a little bit far, right? But if you really pull that band back, the further you pull a rubber band back and then you let it go, whatever is in there, right, it's going to shoot out a lot further. And I think we're going to see that here as we kind of look. So if you want to kind of follow along, let me go over to full chart here. And I just happen to bring up my US 30 chart, which amazing. Has some super nice buys here on Friday. But anyways, we'll talk about that. Anyways, what I want you to do is I want you to go over to the indicators. What I want you to do is I want you to type in BOLL. When you type in BOLL, I want you to add this one right here called Bollinger Bands, just the way it is, Bollinger Bands. And I want you to add it. And we're going to add it 3 times, 2 and 3. Okay? So now that you've added it 3 times, what I want you to do is I want you to, as you can see over here, you're going to see the 3 in here. And obviously they're overlaying each other, right? Because we all have them under the same setting. So the first thing I want you to do is open up this first one. And I want you to go over to the input. And again, you'll be able to watch this on the recording as well. We're going to always make this 50, right? So what the 50 does is the 50 makes this I don't know why it moved. The 50 is the 50-day moving average right in the middle of this band. Now for this first band, we're going to leave this at 2. Okay, we're going to leave the standard deviation at 2. And again, if you want to change the style, you can, the middle, what have you. I just want to change this right here. I'm going to make this actually white. And I want to make this a little bit bigger. Okay, and then the lower, I want to make it white. And I want to make it a little bit bigger. And I'm going to close. So that's the first one that we have set. Okay. Now we're going to go over to the middle one and we're going to go back to the settings. Okay. The colors, kind of the same thing. I'm going to leave that. I want to make this white. Okay. I want to make it bigger. I want to change the lower to the white. I want to make this bigger. But then on the input, I want a standard deviation of 3 here. And then I need to change this back to 50. So the top number will always be 50 on the length. All you change here is the standard deviation. We're going to have a 2, we're going to have a 3, and we're going to have a 4. And you're going to click OK. Okay. Now you can see that the 4 is a little bit more spread out. Okay. And then we're going to do our last one. So we're going to go over to settings. We're going to change this to 50. We're going to change this to 4. We're going to go over to the style, and we're going to be consistent. We're going to make this doesn't really matter. It's going to overlay it. It's still 50, but I want to make this white. I'm going to make this white here, and then the lower white here, and then we are going to close. Okay, so in essence, we've added 3 Bollinger Bands, okay, and we've made the middle okay, the 50-day moving average. I left it a little bit thinner, on purpose, because what I'm more interested in right now is the bands, right? A deviation of 2, a deviation of 3, and a deviation of 4. So again, I'll show it to you one more time, right? The inner one is 2, the outer one is 3, the outer one is 4. 2, 3, and 4. The middle is the 50-day moving average. Okay, so we've kind of set that up now real quick. So we've kind of set it up there. So I just want to make sure if you have any questions or you missed that, you can ask it now down in the comments area, or again, you could watch the replay and post it in there. So we've got the Bollinger Bands kind of set up in there. Okay, and I'm going to kind of move this chart over here so I can see if I get any questions. Okay, awesome. So what's going to happen is this right here. A couple things that I want you to note. It's kind of what we learned and what I learned through the time in the 50-day moving average. Now, you can do this on any time frame. Okay, I'm going to kind of show you the hour, and then I'm going to kind of show you the 5-minute and the 15, because I think that's pretty cool. Okay, now as you go higher in the time frame, you have less opportunity. That's why I like the lower time frame. Okay, because you may not get a deep pullback on the band, but as you kind of look here, for example, okay, remember these rubber bands. Let me grab these bands here. Okay, act like a rubber band. The further back we go into the white lines, usually the harder the candles go in the opposite direction. Okay, they usually go in the opposite direction. It's like pulling a rubber band back. Now, I like at least a second to third band touch. Okay, when I see a second to third band touch, then I begin to say, okay, at some point, we're going to begin to see some type of a reversal. Now, again, it has to go to at least the second band. Okay, the third band is ideal, and I'm going to show you that on the smaller time frame. Now, if you add that with support and resistance, then that gives you another, great opportunity to kind of look at. So you can see here that I had established this area as, I keep moving my chart around too much. I had kind of shown this area as like an area of support and resistance. So what you can kind of do is take a look and say, okay, I saw this previous area here that price rejected, okay, for 4 hours, 1, 2, 3, 4 candles. Price came back to this area, but this time we're on the second Bollinger Band. We have a good push into the band, right? So this type of scenario, if you're going to do it on the 1 hour type of scenario, right? This type of scenario, then it's going to probably look something like this, because what you want to do is you want to say, okay, I'm coming off an area of resistance, number one, and I've got my second band, right? So you would be looking probably at, something like this, right? Where you're going to go above this band, because if we go above this band, we're going to probably go higher, right? But the goal is that we always go back to the 50-day moving average. That always will become our take profit. So this is kind of a good understanding. And I'll give you a couple examples, right? On the 1 hour, how you would use the Bollinger Band. Now, in this scenario, the Bollinger Band did not come down to the second line or more, so you got to discard it, okay? Here, we had, for example, we came down towards the second line. If we look right here, I'll get to your questions, guys, in just a minute. We came back to the second line, right? Look at our 50-day moving average is way up here, okay? So since that's the case, you can say, okay, we came down to the second, right? Even though we're not at an area of support and resistance, you can take a trade opportunity for something like this. Let's go long, right? We're going to get in around the band. We're going to make the stop loss the third band, and we're going to take our profit to the 50-day moving average, which is what happened here. So as you begin to study this, you're going to see as you go through, and that's why I like the smaller time frames, that when we get out of the bands or deep in the bands, we tend to always go back to the 50-day moving average. Here's a great example, right? I talked about we're not looking at the first band. We've got to have a second band or higher opportunity. So that one happened here. We encroached the second band, right? This scenario, would have been something like this, right? We're short. Did I click that? I think I clicked it. Yep. We're going to go above the band, but we're going to go all the way back down to the 50-day moving average. And that's exactly what happened with these two candles. So again, we've seen another example now, 3 in a row, that if we go to the third band or not, and again, that's 250 points on the Dow Jones. If you only have $1, that's 250 bucks right there. Look at your risk to reward, right? Almost a 3-to-1 type of thing. So, here's a great opportunity for you to add another, little tweak to your trading that could really help you. All right, I'm showing you a couple of examples on the 1 hour, and then we'll kind of go back to this 15-minute. Here, we didn't really touch the second one, so let's discard that. Here we did, though. We touched the second one again. Let me grab an arrow so you can see. Right, we came all the way down to the second, and what happened? Price rejected, and what do we go to? The 50-day moving average. So again, you had an opportunity where you were on the second band, and we went up 222 points, right? So the rule really has to be that you are looking at a second or third band touch, right? Especially on the 1 hour. Now, when I drop down here to a lower time frame, I'm going to show you how you can even be a little bit more picky, and you can just pick the third band, and the third band is almost always going to give you profits if you're patient enough to wait for a third band touch. Okay, so let me get over to some questions. Your channel focuses on WTI and gold. Highly predictable from a technical perspective, requires leverage with one more due to lower volatility. Liberty, I guess it really depends, man, on the platform that you're trading in. This is why, I think not everyone has the capital to trade in a futures account because it requires a lot more margin, right? That's why I encourage, since I think most people here are, I think we asked a poll last time, we only have 2 people trading in futures, because I know like Think or Swim, for example, you really need $5,000, $10,000, $15,000 or more to even get approved to to trade. Why I think trading in an international broker, for example, my broker Coinex, because the spreads are so low, right? And you can do a 500-to-1 leverage, unlike futures. I think this is really the place to get rooted in, know how things move, and then if you're skilled enough, enter a trade on the future side and enter a trade on the regular, Forex trading side, if you will. I think that's an easier way to go about this with the international broker, unless you've been trading for a few years and you understand how futures works and you have the leverage to trade. Because I love the volatility in crude oil. I love it on the US 30. I love it on the NASDAQ, and I love it in gold. That's why I'm there. Because for me, knowing what kind of trader I am, I've shared some screenshots on my profits, right? $300 or $400, adds up very quickly. Because if I'm grabbing 30 points here, 50 points on the Dow Jones, 30 points on crude oil, next thing I know, I'm at $200-300, and it's not even market open yet, type of thing. So that's what works for me, right? And I think most people that trade or are learning to trade don't have the time to be sitting in front of computers, but they do have the time to scalp and make some profits. So I think that's why I'll always focus more on that style of trading versus a swing type of trading. I think there's some great products like natural gas, even like the indices, to swing trade, because even if you're wrong, you're good, but you have to have the capital and the leverage so you don't overtrade or overburden your account, right? So it just depends on what you are looking to do there. Let me get over here. Any other assets you plan on focusing on here? Other commodity, major stock index, or currency pair? I'll kind of look at something on this training that you want me to look at. I'm going to leave that for the last 10 minutes. I just want to show you some more examples on how you can use Bollinger Bands to find some entries for the day-to-day folks. Technical trades or more powerful assets versus another. They're kind of the same. If I go into my TD Ameritrade chart right now on futures, I have these Bollinger Bands on my charts because when I went over to futures, I wanted to be able to look at bands because I was being specific. I told myself, and it's in my trading plan, and I think maybe on the next call, we'll work on writing a trading plan. I specifically have price has to go into the third band. If not, I don't take the trade. And I'm going to show you some of that in just a little bit. Alex Armando, what all contracts should someone? Alex, good question. So the $1,000, let me know in the comments if you are referring to, are you trading this on the future side, or I assume with $1,000 you're really just talking about on the regular broker side, right? Because that's going to make more sense. I don't even know if you can get approved on the future side if you only have 1,000 on the account. So let me know if you're talking about like an international broker, and then I can answer your question. And one time does Europe start trading crude oil? Yeah, I'm finding out some nuggets, and if I get around to it on this call, I'll show it to you. But there's a couple of different moves that really are set for 3 to 5 a.m. and 7 to 9 a.m. You can really scalp a nice move. Yeah, exactly. 3 o'clock. Yeah, 3 o'clock is 3 to 5. I'm going to show you something, not on this video because you just brought it up, but I was going to make a full-fledged video on it, where if you stick to those, depending on your people work schedule, whether you work the midnight shift or you work daytime, right? Because people do different types of jobs. I want to give people a 2-hour window with a scalping strategy on crude oil where you can catch the movement of easy 20 to 40 cents in either direction between 3 and 5 a.m. and 7 to 9 a.m., even before the equities opens. I'm going to show you that move because around 8 o'clock in the morning, Eastern Standard Time, I've been told that that's when the contracts get filled. And so that's why you usually see a pre-market movement, because contracts are beginning to get filled. So we'll talk about that, as we kind of go up. Oh, futures. Okay. Yeah, same thing. Futures is the same thing. Futures, 3 to 5 a.m., you're going to see a typical move, and then you're going to see another big move, usually between 7 and 9 a.m. Sometimes that's the false move, trapping sellers or buyers before the real move happens when the equities opens. So we'll talk about that as well. Coinex. Okay, yeah. Remind me, and I'll share my link because we have a group link in there. They actually lowered the spreads and the fees for me. Coinex, I've been using them for 5 years now. I withdraw every Friday. I have been for a long time. You basically put money in through Bitcoin. I use Cash App to fund my account when I was funding it, and I take out money every Friday, and it's in my bank within 48 hours. Actually, not in my bank. It goes basically, you buy Bitcoin. I use Cash App. You can use Coinet or Coinbase or something else. I buy Bitcoin through Cash App, and then I transfer it to Coinex. It gets into my account in 10 minutes. On the withdrawal side, I put in my withdrawal through Coinex. Within 48 hours, it hits my Cash App, and then from my Cash App back to my bank account. So I'll send you the link on that because it's super, super cool spreads. Like I said, the spreads for the indices are not even a 1, and crude oil in session, I believe it's 1.5 cents. So it's ridiculous, and the fees are super cheap. Awesome. Okay, so let me show you this real quick on a 5-minute time scale. Okay, let me show you this on a 5-minute time scale. Let's go over here, and let me bring this up. Because as you drop lower, you're going to have other opportunities, okay? So here is what I was talking about, for example, right? Here, on the 5-minute, if you want to be very, very critical, I would tell you third band, and if you can have a second confirmation of an area of support and resistance, you will probably never lose a trade, meaning you're going to grab 20 to 30 points with your eyes closed, okay, if that's all you do, okay? If that's all you do. Awesome. Awesome. Good to see that. You only trade crude oil. Good. And I think that's important at the beginning. You focus on 1, maybe 2 pairs max that you really master, because you'll have plenty of trading opportunities. So awesome. So here, for example, right, we had an area of resistance established. So we have check mark number 1. We have price push up into the third band into this area of resistance. On the next candle, price came up. Probably what happened was that people were still looking to buy. Oops, let me go to the arrow. People were still looking to buy here, and then look what happened. Price reversed, right? So here it is. We have confirmation of a zone, check mark 1. We have a candle pushing into the band, right? Check mark number 2. We get our entry, and we take it down to the 50-day moving average. Right? We take it down to the 15 minutes. So within 5, 10, 15, 20, 25, 30, within 35 minutes, right? Because we hit all the check marks, right? We're looking at somewhere around 213 pips or points on the US 30, right? And you can do this on crude oil. You can do this on anything. because I've already done it. Cool. Alejandro Liberty Wolf here giving you a little shout out. Awesome. That and again, that I don't want to be the only one chatting in our chat group. By the way, you guys share charts. Everybody here is an expert. You may see something that I don't see. Right? I'm not always looking at the charts, so I hope we get more interaction in there as well. Okay, so let's keep on looking here, and then I'm actually going to bring this up to one more chart. Look at here, right here. Right now, I don't have zones established this far down, but again, we don't need a zone, right? We had third touch and then back down to the 50. Okay, so let's do this. Since we have all the crude oil people in here, let's do this. Let's go here. Let me get rid of the drawings. I'm just going to leave the indicators. Okay. And let me go back. So there's no shady business thinking this thing is a setup. Okay, let's go back. So we went back. Let's keep going back to wherever. Let's just find a spot. Okay, boom. Let's just go here. Okay, and this is why I want you all to test this and back test this. Don't take my word for it. Put these bands in your chart and go back and see which one gives you the highest probability, right? On a 5-minute chart, if you can get a third band touch or very near it, you're more than likely, at worst case, if the next candle goes in your favor and then reverses, at worst case, you're going to break even, right? At worst case, right? So here we had a pass a second into the third. You take this trade, it went down to the 50-day moving average. Okay, so let's kind of mark this up, and I want you to kind of keep count, right? If we're kind of looking at second to third band, that's all we're going to do. We're not doing first band. We're doing second into third band opportunities, right? Here's another opportunity. A few minutes later, whatever, 30, 40 minutes later, second band, third band touch, price kicks up, comes back, gives you another entry. If you decide to take another entry or you just wait it out, maybe you cashed out here because it got close. Long story short is what? It went back. The 50 loves becoming like a magnet, right? The 50 becomes loving like a magnet. We're on crude oil, by the way. Comes to the 50, okay? Let's go into our analysis. That's a one touch. We're not even going to touch these that are one, okay? Here we go. Second, third band. We decide to get in somewhere here, no matter where you got in, right? We take it down to the 50. We came just shy of the 50. If I'm me, I'm closing out because if my trading plan says 20 points, guess what? Even if I got in late, right? I got in at 80.27. Even if I get out here, I'm already at 79.97. There's my 30. There's my 30 or my 20. So again, if you're doing 20 cents at a time with this strategy and you do this 4 times a day, you're netting 80 points easy if you're very specific on only waiting for second and third band touches. Okay. Yeah. Long as well. I'll show you long as well. I just gave you a long right here. Here's a long scenario, right? There's a second band, third band touch, and you took it up to the 50. So there's a long scenario right there. Here's a short scenario. Let's keep moving. Here's a short scenario. Here's a long scenario. We pushed into our second band, and maybe you didn't take this, but I just want to show it to you because maybe you say, okay, it's worth the risk because I'll have a tight stop loss. We pushed into the second band. We went all the way up to the 50. So there's another scenario on a second band back up to the 50. And again, these are a lot more than my 20 points that I look for. 17, 18, 19, right? That's 34 points if you took it. So this is why, guys, you have to set up a trading plan. You got to know what you're going to do every time you get buy or sell. You got to know when you want to get out. I like 20 on crude oil because I'll do that 5 or 6 times a day, right? If I'm not busy doing other stuff and I'm trading that much, because 20 cents on oil is ridiculous, right? Or you leave it open and you move to break even, right? Never let a winner become a loser, right? So let's keep going. Here's another one, second band touch. So far we're 4 for 4, back to the 50, right? This one came close to 50. Here, if you waited, back to the 50. And again, let's say wherever you got in, maybe you only got 12 here, 13. If you kept it open, then you're writing it all the way across, right? Which is common that it goes all the way to the other bands. Bands just work as bands of bands, but I want you to be specific. Right? I want you to be specific. Now you have to look at the hours of the day, right? Right here. Where did my box go? Right? This is between 1 a.m. and about to be 2 something a.m., right? Probably not a great time to trade. All this time here, you shouldn't be. I don't trade these sessions. This is all that Australian session. Look what happens. Price just kind of hovers, right? That is not a trading session. But I want to show you something since we're on the call, right? Remember we talked about that 3 to 5 a.m.? Okay, that 3 to 5 a.m. So let me take a look at this. Let me show you an example. What happened here at 3 o'clock in the morning, right? Price came down. Hold on, let me bring up this chart. It looks a little funky. Okay, 325, 3. Okay, now at 3 o'clock, if you already see price here, right, and we're dropping, right? Remember, the trend is going down. Don't go against the trend yet. Wait until you get a deeper push into the band. If you started here at number 2, like you may have gotten a few points, but that's 2 or 3 points. You got to ask yourself, okay, where is there a move? This is where I want to show you this real quick. And because you're here, I'm going to show it to you real quick. And then I'll do a full-blown video on it as well. Indicators. This is what I picked up between 3 and 5 a.m. You're going to get one move in the morning and one move during London session. You're going to put 2 moving averages simple. Well, I got to get rid of this box. I can't see what the hell I'm doing. Okay, 2 moving average simples. You're going to go to the first moving average, and you are going to have a 9, and we are going to make this, let's do yellow, and let's do it like this. And then you're going to go to the other SMA, and you're going to make the input 18. And oops, 18. Don't ask me why that keeps changing. And we're going to make the style, what's another weird color here? Let's go aqua. And then let's go a little bit deeper here. Boom. Now, okay. Where's my aqua? Okay, here's my aqua and here's my yellow. Okay, so if you notice that price, let me move to the 15-minute chart. Perfect. Let me find 3 o'clock in the morning. Okay, so 3 o'clock in the morning, we see that yellow, which is a little bit thinner, so I apologize for that. Okay, our SMA is below, okay, the 9, which is the faster one, is below the aqua. Then we know we are in a downtrend, right? We're not going to look to buy here, right? So we're down in the downtrend. Now what happens on the 15-minute candle is this candle at 3:45 a.m. came down and touched the third band, right? So we're like, okay, we're within 3 and 5. Yes. Is it going downward? Yes. There's always going to be a reversal between 3 and 5. There's always going to be a reversal between 3 and 5, guaranteed. Okay. So obviously, yeah, your time frame is going to be, when I say 3 a.m., I'm talking about 3 a.m. Eastern Standard Time. So this is 12 midnight out in California. Okay, out in California. Hold on, let me grab some water. Man, I'm sorry. I thought I was full screen. It sucks to watch like this. Okay, so there's always going to be a reversal. So at 3 o'clock, and again, you can look down here, right? This is 3 o'clock, right? Price takes down. The market, the London session opens at 3 and it goes down. You're going to be patient. You're going to wait to try to get a third band touch down here, right? Now, your entry at that point should be something like this. Your entry should be somewhere like right around here, targeting the 50-day moving average, which is up here. And your stop loss is basically below the band. Okay. So you're looking here at almost a 3-to-1 type of thing. Okay. There's always going to be a change of climate. If you get this one move on London, you're done. You're done. Because and mark the boxes. The open push down in the third candle, and then you cut the one move. We're not in the Bollinger Bands anywhere here. Now we're waiting, right? Now we're waiting. Now we look here, and guess what? This is now 9 o'clock in the morning. Okay, 9 o'clock in the morning. Now, you are going to have to decide, right, if you are going to be very strict on a third band touch or you are going to take uh, a second band touch as well. Because here are the 2 hours that I just gave you. From 7 to 9, there is a shift in crude oil. Here is the shift right here. We were trending down between 5:30 to about 7 a.m. on the dot. Market 7 a.m., hit the second band, and then took off, right? Now, you probably would have, right, seeing this wick here, maybe you were at break even, maybe you got stomped out here, and then the market took off again. Okay, the market took off again. But again, what I wanted to just to show you this here is because I use the moving averages to show you if we're below the aqua line, you're waiting for the bounce back up towards there. You're not going to sell here because there's going to be a reversal, right? We're below the aqua line again, right? Here we were above the aqua. Now we're below the aqua line, yellow crossed. So we're going back down towards the bands. Be patient because maybe your entry was these wicks right here. That would be an amazing entry. This one touched the wick, but even if you went in here, you would have a situation like this where let's say you got in here, then I would do something like this, tighter behind the band, right? But I'm going to still go always towards the 50-day moving average. I mean, have you not seen how every example I showed you, the 50-day moving average is a magnet for price, okay? Is a magnet for price. Now look at the opposite direction here. We had a shift. Guess what market did? This is market open. This candle right here is 9:30 a.m. Market pushed up. Guess what everybody was doing here? Everybody here was buying. Buying, buying, buying. We hit the second band. Uh-oh, we just hit a check mark. We hit a second band, right? Let me look for a reversal. I'm getting in on this price right in here because I know that I'm willing to risk this be above the band to go back down to the 50-day moving average. And guess what? We come back down. We never even enter the stop loss area. And we're almost at a 4-to-1 risk to reward because we went above the second band. So every time you see this second band, third band, you get opportunities if you are patient to do that. Here is third band, right? Could have taken it up. Now, this one didn't reach the 50-day moving average, but this one got you points if you wanted to take it. Second band, you probably either broke even, maybe you took a loss on this one. Going back down here. Oh, I'm sorry, this was first band. No, we don't take that. This one could have been 50-50. If you took it, you definitely profit from it. So what I'm saying is go back and look and see when you have second and third band touches, right? What happens? What does price do, right? Do you at least get a chance to make a little bit of a profit, right? Look at this one. Second band up here again. Same thing. Short position. There's your stop loss, the band, and you're going down to the 50-day moving average. You made out again. Here's second band. Oh, I don't have to show you this one, right? Boom, all the way up. So when you look at this, if you go back and you study it and you just focus in on second and third band touches this or way above, the higher the better. Oh, I'm sorry, that's a first band. We don't count that one. Here we go. Third band, boom, right? Here maybe you took the initial loss, but once you saw price come back again, right, and return back, then you have a second entry. So let's count this one as a loss, but then you got back in here, right, with a tight stop loss, and look what price did. It shot off. That was that wick there, that was trapping sellers going down. And that's where we are now on crude oil. Okay. So just another thing to add to your toolbox to definitely take a look at, as you're moving forward. Okay. Let's see, 200-day. Yeah, for something like this, I like the 50-day moving average. The 200 moving day average is great to see if you should be buying or selling. If you're below the 200, you should be looking for sell opportunities on pullbacks. And if you're above the 200, you should be looking for buy opportunities on the pullback as well. Okay. So you can definitely focus in on that. Okay. My friend Bruno, man, Bruno, guys, if you haven't seen Bruno posting in my comments, this kid is consistent, always in there. He wants more. He wants more. He's sucking the juice out of him. He wants a video every day. Can't always give you a video every day, Bruno, but I'm going to do the best I can All right. So for a cup of coffee, I think you're getting some tremendous value here. And not even a cup of coffee a day, a cup of coffee a month. So enjoy it, but I'll do the best I can. And I'm glad that you've been winning some trades. So thank you for that. And as always, you can definitely, you're laughing. You can definitely always, have a little extra level of support. You can always support me by just definitely any regular video that I do, definitely liking it, comment. You guys know how YouTube works. And if you can share my videos, maybe someone in your country, someone wherever you live will say, oh, let me take a look at this. And maybe they'll join you because trading is much easier in a community for sure. So I know for sure you got value today. If you start looking at this, and again, if you got here late, go back and watch the recording, add these Bollinger Bands, and then just start looking at whatever you trade. Start looking at second and third touch bands on the 5, 15, and 1 hour, depending on how you want to trade it. And you're going to see some amazing opportunities to scalp the markets all day long, all day long. But again, on crude oil, 3 to 5 a.m. Eastern Standard and 7 to 9 a.m., there is always going to be a shift in price. If you can catch that shift because you saw this today, it is going to make it much easier for you to catch a shift like this because it happens every day. If you go back and you analyze, the chart, you are going to see this every day at that time. You're going to see a shift in price. And I'll kind of leave you with going back. Let's go back a couple of last days, and then we're going to wrap this up. It's Saturday. I got some stuff to do. Let me just show you this right here so you can see it. Here is, I want to kind of mark it so you guys can see it. This is how you study the market. Oh my God, I can't believe this. Okay, right here. Watch this. Vertical line. Where's 3 a.m.? Boom. 3 a.m. 3 a.m. Right now I'm on the 1 hour chart. So I'm going to leave that line right there. Look what happens. Price shifted away, right? Price shifted away. So if we go down to a 15-minute, oh man, hopefully I can find it now. Let's see, where's my line? Where's my line? Where's my line? What day was I? I don't even know what day I did it on. I should have marked the time. Anyways, I'll look for one more time. If I can't find it, oh well, maybe I missed it. All right, anyways, go back. That's your homework. Hey, I appreciate it, Alex. That is your homework to go back, especially if you are going to only focus on crude oil. Go back, study the chart. You don't need to wait for somebody on a Telegram channel to tell you buy or sell, right? Go back to the chart and look between 3 and 5 a.m. and then 7 to 9 a.m., even before market open. Tell me what it does, and I want you to come back on the next members training and tell me what you found. You are always, in every chart I've looked at, there is a shift in price. So you just need to be there waiting for it. I can't tell you it's always going to happen at 3 a.m. Sometimes it happens at 3:30. Sometimes it happens at 3:45. But if you apply the Bollinger Bands and you can work a little support and resistance in there, I can guarantee you, right, a guarantee that you will make profits during those time frames. Guaranteed. I only promise you 20. If you get more, good for you. I promise you, you will get 20 every day if you go back and you look for these little movements in the market at that particular time. Okay? All right. That's it for me. I appreciate you guys. Enjoy the rest of your weekend. I do have a crude oil video that I recorded before this live, a full-blown analysis. That'll come out tomorrow at 11 a.m. Eastern Standard Time. As always, I appreciate it. Not only do you watch it for you, but like it, comment, and then definitely share it on your social media pages. That would be greatly appreciated. All right? Have a good weekend. See you. Stay safe. We'll see you tomorrow. You're welcome, buddy.